The total bad loans from the banking sector rose by 21 billion shillings in the first quarter of the year, as defaults rose among households and businesses in the agriculture, trade and manufacturing sectors. The increase in bad loans or non-performing loans, which partly reversed the decline of 46 billion shillings seen in the fourth quarter of 2025, came despite falling interest rates, which have lowered the cost of servicing loans for borrowers. And TV's Brian George Otieno reports.
The Central Bank of Kenya says that the default rate on gross loans rose to 15.6% at the end of March from 15.4% in December, raising the volume of non-performing loans from 674.4 billion shillings to 695.4 billion shillings in the period under review. The higher volume of bad loans is a factor of lingering economic challenges facing businesses and households and the faster growth in lending to private sector by banks. Gross loans to the private sector grew 8.1% to 4.46 trillion shillings in the 12 months to March 2026, compared to 7.4% in February and a contraction of 2.9% in January 2025 as per data provided by the CBK. The March growth represented the fastest pace of new lending by the banks in 2 years, attributed by the CBK to improved demand for credit by the building and construction, trade, agriculture, and consumer durable sector. In contrast to the first quarter of this year, banks had made strides in lowering the exposure to bad loans in the last quarter of 2025 after aggressively pushing recoveries through auctions, even as they expressed concerns about difficulties in selling the seized collateral such as houses and motor vehicles. Businesses also experienced improved liquidity after the government settled more than 123 billion shillings worth of pending bills in the period. The settlement of the pending bills enabled contractors to honor their obligations with banks, having been among the biggest drivers of the growth in non-performing loans over the previous 2 years. Bankers also said that the more money flowed into the economy, more businesses were submitting repayment plans for their overdue obligations, allowing banks to reclassify these loans from default to performing. The decrease in defaults contributed to the industry's annual pre-tax profit for 2025 growing by 20% to 311.8 billion shillings, up from 260 billion shillings in 2024. Lower non-performing loans allow banks to hold fewer provisions, which are deductible expenses on their profit statements. Looking ahead at the rest of the year, executives polled by the CBK in its periodic market perceptions and CEO surveys expressed optimism that the momentum in business activity and economic growth prospects will be maintained, signaling a moderation in non-performing loans. The CBK attributed the optimism to a stable macroeconomic environment with low inflation and a stable exchange rate, lower interest rates and expected favorable weather conditions, which are expected to support agriculture. Respondents also told the Apex Bank that increased infrastructure spending, increased digital innovation and improved private sector credit growth will support business activity. Brian George Otieno, NTV, Nairobi.